I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have David Schwed, the Chief Operating Officer of Halborn. David, welcome to the show, and thank you for taking the time.
Thanks for having me.
You're very welcome. I feel like this is a perfect time to have this discussion around cybersecurity, security risks, and proper measures need to be taken in blockchain, whether it's to do with DeFi or centralized exchanges or your personal security of your funds, becoming ever more important with things happening in the industry that are everything seems fine until it isn't. And we saw with the FTX crash this contagion of all these different companies that are interlocked, and your funds may not be safe with those companies. So I'm excited to dive into your insights into the industry. Being a sort of an expert in this space, I would love to start off our conversation by just hearing a little bit more on your background and how that led you to getting involved with Halborn Security, and then we'll dive into all the details.
Sure, absolutely. So at a 20,000 foot level, the early part of my career I spent in TradFi. In various roles such as infrastructure, information security, risk management. In 2008, I co-founded a telecommunications company, which I ran for about 10 years before we were acquired. While I was at my company, I was enamored by digital ledger technology. Unfortunately, not from a valuation perspective. So I bought and traded some Bitcoin back in 2012 or 2011, end of 2011. But again, it was really more about I was not necessarily a cypherpunk per se, but just a general interest in this concept of this distributed ledger technology and the different potential use cases for it. And when I had sold my company, a friend of mine was over working for Mike Novogratz, Galaxy Digital, and there was an opening for a chief information security officer. So timing was right. I was enamored by the technology, so I went over to Galaxy to help stand up their information security, program, if you will. I spent about a year there, left, went into academia, where I was the director of a cybersecurity master's program for University of New York. And then I went over to BNY Mellon, where I was their global head of digital assets technology. So for them, it was building out the custodial platform as well as exploring looking at other types of use cases for digital assets, whether it's tokenization or execution services as well. And while I was at BNY Mellon, there was a need for engaging with different firms to come in and do some third-party assessments. So Halborn was one of the firms that I was particularly interested in, really from a reputation standpoint. For me, I'm big on let me tap into my community of CISOs and ask them who do they trust. And about 4 or 5 of them all gave me the name Halborn. So I reached out, had a conversation, developed a relationship with Halborn, and now I'm over at Halborn now.
Incredible background, and leading up to that point now. So what is your main focus with Halborn, and what are all of the different arms that they're reaching into in terms of security?
Sure. So my role at Halborn is really to help the company grow, right? So it's either, helping build new products and services, operationalizing our back office, doing more with less, if you will. It's challenging today for anybody in the Web3 security because there's this, how do you scale type of a problem? And some firms are taking the answer of let me build technology and, to use people less and to use technology more. I am personally of the mindset, and Halborn is as well, that, we're not at the stage at this point where security, smart contract audits or program audits can be automated. You still need eyes on glass. You can leverage technology to perhaps identify some low-hanging fruits, but this is still, it's, at the end of the day, this is a bare asset. Whoever holds it, owns it. So, we can't necessarily rely on, static and dynamic code analysis. There needs to be actual, red team pen test engineers that are actually looking through the code and identifying not only vulnerabilities in the code, but more importantly, vulnerabilities in business logic. You have a bunch of developers today that are writing financial services applications that aren't necessarily people that have been in the financial services industry for the last 30 years. So they're making some fundamental mistakes from a business logic perspective that you're not going to get picked up from automated tools or even from automated testing. It's going to have to be someone who has that mindset that goes through and says, how can I exploit this for malicious gains? And that's where, people come into play.
Definitely. And does Halborn, you focus on the security of decentralized applications and DeFi, but also on, blockchain transactions and monitoring illicit funds and if there's centralized exchanges involved?
Correct. there are multiple different types of people within crypto or organizations within crypto. There's the true believers, the libertarians that this is the people's money and we're not going to trust a government from a currency perspective. Listen, there's definitely a use case for digital ledger technology for that type of audience. However, the audience that the other side of the house is really like the financial services, and it's really like the institution, the enterprise. And for them, in order for an onslaught of capital to be, not that there isn't already, but even more, to be injected into the ecosystem, there needs to be trust. And when you have all of these hacks and you have all of these, again, criminal activities, alleged criminal activities from certain organizations, it sets the ecosystem back. So Halborn's mission is to really secure all Web3 projects, the ecosystems, from a totality. So we're not necessarily focusing on just smart contract auditing. We're not necessarily focusing on pen testing. We are focusing from a risk management perspective of what do I need to secure for this particular Web3 project in order to instill trust within the community. And that's our mission. Our mission is really to secure Web3 projects and ecosystems.
Okay. And take, for example, the recent FTX insolvency and debacle. Obviously, there's a lot of trust that people giving their funds into FTX, and sometimes those funds are moving around on the blockchain, but also in the exchange, there's just your balance, which is sort of their internal controls, and that's not always been able to be tracked by third parties and cybersecurity firms. Do you see if any security firms had like a yellow flags going up since the spring crash of Celsius and Luna, that people are watching the blockchain and looking for other issues and trust issues, and it seemed like this sort of came out of left field, and nobody, including the security firms, saw what was coming?
Well, I think if you take a step back and you look at what is security, security is really just a subset of risk management. And if you look at the end of the day, and if you look at just pure risk management practices, there are definitely red flags, right? I'm not sitting here and saying that I was shouting from the rooftops, don't use FTX. I really honestly didn't have an opinion on them one way or the other. Personally, I don't use exchanges. I self-custody. However, I'm qualified to self-custody, and I'll touch on that in a second. But again, looking back, red flags. No board of directors, no audited financials. That to me screams that there's something potentially going on under the hood. And when you look at risk management as a whole, we always say, not your keys, not your crypto, which is true. But again, I'm not advocating that everybody, even novice users, start pulling their money off of exchanges and self-custodying, because that's like saying, I don't trust the bank's vault, I'm going to take cash and put it under my mattress. Now, if you don't have the same type of security or physical security for your house, putting it under your mattress isn't a better solution than leaving it at a bank. So for many people, leaving it on an exchange or leaving it with a custodial provider is the way to go. But from an institutional perspective, I would always advocate how much money are you leaving on an exchange versus how much money are you self-custodying versus how much is in cold. It really comes down to, again, risk management. Do I actually need access for liquidity purposes for certain types of my assets? If I do, potentially leave it on an exchange. Or at the end of the day, pull it off the exchange at night. Again, there's going to be some fees for on-chain transactions, but if you don't need ready access for liquidity, I would say, self-custody.
That's a great point, and I think an important part of risk management is also diversifying your assets. Not just inside and outside of crypto, but the location that your crypto is in. Don't leave it all in one account.
Correct, 100%.
And you mentioned there, being qualified to do self-custody, but you also want to have a certain level of security. If you have $100 on your mattress, it's not as bad as having 100 million, right? Or billions. Which recently there was a story that one of the Silk Road hackers, they found a few hundred million just in his bathroom on a USB stick, not hidden very well. With the institutions that are coming in to digital assets, obviously if they have hundreds of millions, they're going to want to secure it, and custodial services seem to be the best option for that. I'm guessing that those custodial services are also working with cybersecurity firms to ensure that they have the proper security to secure customers' funds.
Yeah, absolutely. And you bring up a great point from when you're doing due diligence. When you're looking at firms, from a custodial standpoint, it's asking those, perfect questions, right? Like there's a key differentiator between a qualified custodian in the space and a technology, custodial provider. For example, it's really at the end of the day, who's holding my keys? So if you're going with a qualified custodian, they're holding the keys on your behalf. And if you're using a technology custodial provider, there's additional level of safeguard in the sense that you either, and if you're using MPC technology or an HSM, you either hold the keys in order to effectuate a transaction, or if it's MPC, you hold a piece of that key share. So in that case, it really truly is your crypto, because the challenge is just like banks, you deposit money, they lend your money out in order for the banks to earn money, and that's what pays your interest. There's no difference in crypto. We're depositing crypto, they're lending the money out. The problem is it's not TradFi, 30 years worth of experience with, enterprise level risk management tools. It's unfortunately people that are first figuring out, what do we want to do here? And the other issue is we are leveraging, we're offering such high yield that, as a consumer, I would take a step back and ask, well, where is this yield coming from? You have to be either making risky, lending practices, or you're not spending the proper money in order to secure that ecosystem. Like you can't just print money out of thin air. It's coming from someplace. So in this case, it turns out that they were either completely fabricating and making things up, and or making some very, very risky loans, and that's where you get those high yields. But the consumers aren't participating or agreeing to those risky loans. It's the institutions that are doing it on behalf of their crypto. So I think from a due diligence perspective, some of these practices could be very easily uncovered just by asking certain questions.
Yeah, that's a great point, David. And for example, when Luna's UST stablecoin was offering 20% yield in stable versus 10%, which is still fairly high to the other coins, it just seemed like too good to be true, and it turns out that it was too good to be true. And I didn't touch that one because I just thought it just seems weird. Well, why are they offering double for my money for the same thing? And in DeFi, there's, even though a lot of these CeFi lending platforms have all sort of collapsed for the most part, and they were offering higher yields, DeFi still seems to have a lot better yields than in the bank, and using these smart contracts. So do you see the institutions looking at DeFi platforms and like, hey, we should move our funds into these DeFi platforms and trust the security firms that are looking at the smart contracts and ensure that our money is safe with those, and sort of have the centralized custodianship, but also like into the smart contracts and DeFi for the yields?
I think when you get into like large financial institutions like GSIB and GSIFIs, globally systemic important banks and financial institutions, I think personally, I don't think we're going to see a shift into DeFi for at least a few years for a variety of reasons. One is obviously the security concerns. The problem that I'm seeing is there's kind of twofold. Is you have decently well-capitalized projects entering into the market. So the DeFi protocols or all of these startups are getting nice seed checks, whether it's 10, 15, $20 million. However, that's not enough money to stand up an enterprise-ready cybersecurity program or practice in order for banks to feel comfortable to use them from an asset perspective. So I think until the ecosystem gets to a point where banks from a due diligence perspective feel that their security posture and environment is up to the level that that a bank would want, I don't think we're going to see banks entering into that market. At least that's my opinion.
Yeah, you need a lot more than that, for the banks at least to trust you. And in terms of having that level of security that's necessary, obviously that takes a lot of money. What are some of the steps that DeFi protocols are going to need to step up their security to eventually make their way to being trusted by the banks?
Yeah, I mean, there's a couple of things they can do, right? So the first piece is, well, number one, KYC and KYT and sanctions. I mean, that has to be addressed in DeFi. Banks, regardless, are not going to be able to even participate if they're potentially the counterparty that they're dealing with hasn't been KYC'd or KYT'd. So let's kind of move that obstacle off to the side. That needs to be solved in order for DeFi to enter into the market. But outside of that, it's really, if I'm a DeFi project or just any Web3 project that wants to play in the institutional world, you have to hire CISOs, right? You have to hire actual CISOs and not directors of security that you're now giving a nice fancy title to. There's a big difference between a CISO and a director of security. And what I'm seeing in a lot of these Web3 startups is the CISO that I'm talking to is really a director of security. And that's not to knock that individual's technical chops. They're phenomenal security people. They're just not at the level of the C-levels security officer, where they're really understanding strategically how to stand up a program to address banks. So I think that's the first step, and the other piece is really for these new CISOs individuals to really stand up an environment that would pass a bank's audit. Again, without telling you where I was or the companies I was talking to, but I have talked to some Web3 startup companies where if you look under the hood, they're in effect YOLOing their infrastructure in a sense, where there's no backup, there's no resiliency, there's no segregation of duties, they're not adequately testing things before they go for production. I've worked with organizations where we'll request a feature and they'll tell us, oh, you can have it by next Friday, thinking that we'd be happy with it. But coming from a large financial institution, like how can you roll out a new feature and adequately test it, get a third-party attestation, fix all the bugs that they probably found, and roll it out in a week? If you're telling us that you can roll something out to production in a week, you're obviously not doing the type of testing that we're looking for. So I think they need to borrow a playbook from large financial institutions.
Yeah, it's so interesting with DeFi platforms because when DeFi summer first happened and people were getting excited about yield, the thing was that if you didn't get on in the first day, before you even had time to check the audits or what the smart contract says, that's when the yield is the highest, and then it sort of goes down. And people are just so hungry for high returns that they don't even read any of the security information. They just throw their money into contracts that we're still seeing over 100% yield on something that's seems very Ponzi-like.
Yeah, I mean, you're right? I don't think necessarily these projects are starting out to be a Ponzi scheme, but in order to pay out the yield, they have to have new people coming in and injecting fresh capital. That's going to dry up at a certain point. So whether people stop having capital to put into these liquidity pools, and or there's bad news and everybody starts doing a run and starts liquidating their positions, that's when you start creating this panic that's happening right now.
And I recently saw in the news that Halborn just closed a huge fundraising round of $90 million. So first of all, congratulations to your team. That's incredible. I'm curious on with that capital. Obviously you said it takes a lot of capital to work with these big banks and work with big players. What is that capital going to be mainly used for, and how is your team going to continue to expand out from here?
Sure. So the capital is really for us to grow, right? So, we're a professional services organization at the moment, and we have launched 2 products, and we do have a product roadmap for 2023. So for us, we are uniquely positioned to understand what's lacking in the market from a security perspective, and that's what we're trying to build. So between what we see from doing our daily audits and engagements to also working with some of our larger clients and asking them frankly what tools are missing for you, that's what we're building, and that's what the money primarily will be used for.
Great. And if I'm looking at a DeFi product or a custodial service, would I see security by Halborn, or do you guys sort of have a public-facing check mark, or you advertise who you work with? How does that work from an end user perspective?
Sure. So it really depends on the client. Some clients want publicly, exposed reports, and some of them want to keep them private and only, provide to their clients. So the ones that permit us to have public reports, it's on our GitHub repo. So if you go to the, on our website at the bottom, there's a link for our GitHub repo, and you can see our public reports. Now, the public reports don't necessarily go into the full details of, some of the vulnerabilities that have been found. It's more of a high level with, whether or not that particular vulnerability has been remediated. And we also validate the remediation too. So we don't just issue the report. We'll issue the report, work with the client to remediate, retest, and then issue the final report to say, this particular vulnerability has been remediated. But you can find all of that in our repo. Great
to know, David. And moving forward with DeFi projects, I don't think people are going to stop creating new ways to generate yield. Do you think there will be some standard of security or standard implementation that the DeFi community can come to a consensus that, you know, these need to be the things that, you know, at least at some point, like the audits and insurance and other things, for I guess, you know, eventually people get tired of investing in things that don't have all of these standards.
Yeah, so I do. I think we will get to that point where there is a framework, or there is, and again, framework and regulation to me are kind of like not the gold standard. They're the bare minimum where you need to be. I don't think we haven't seen that yet in crypto. You know, there's been some organizations that have tried to come out with certain ones. The one that I'm, you know, personally most bullish on is the nonprofit called Crypto Consortium. So they released something called the CCSS standards, which again is focused more on key management, seed generation, and they have different standards, right? They have a level 1, level 2, level 3, you know, escalating level of security. So I think we need more either organizations like Crypto Consortium coming up with different frameworks, or Crypto Consortium, you know, tackling other areas as well. But I do think that is something that is needed, and I do think that, you know, there are organizations working on it. We are participating in a few to kind of offer our feedback as well. But I do think that that is something that will, you know, effectively help, right? Like once their community can get consensus on, you know, this is where we think the bare minimum of security is, and then as long as an organization can hire a firm like Halborn or one of our competitors to come in and audit them to those particular standards. But again, the heighten is risking. These are bare assets. You know, so what worked in TradFi as far as let me get a SOC 2, SOC 3, SAS 70, you know, from, you know, the olden days, or ISO standards, you know, those are all point in time, relying on an auditing firm to come in, which is absolutely necessary. But I don't think that, you know, customers should absolutely, or clients should absolutely rely on that per se. I think they need to also start doing their own due diligence as well. You know, and again, they can hire a firm like Halborn and one of our competitors to kind of come in and help them, you know, do due diligence of, you know, whatever custodian or provider that they're working with.
Great information. Thank you so much, David, for all your insights into, you know, security of Web3. It's of the ultimate importance if the industry is going to grow and improve and bring in more big money to take it to the next level for mainstream adoption. I really appreciate you coming on to talk about Halborn, and I will leave the links to Halborn Securities, the docs and the platform in the description box below as well. I appreciate you taking the time, and let's follow up in the near future.
Great. Thanks for having me.